You lost money again today. And the worst part is you knew better. You saw the setup, you had the plan, and then something happened inside your head. Maybe you moved your stop loss. Maybe you panicked and sold too early. Maybe you watched a trade you missed skyrocket without you, and you chased it right into a loss. And now you are sitting there staring at a red screen, wondering what is wrong with you. Nothing is wrong with you. But something is wrong with how you were taught to trade. Because every course, every YouTube video, every trading mentor spent hours teaching you indicators and patterns and entry signals, and almost nobody talked about the one thing that is actually killing your account: your mind. The strategy is not the problem. It never was. I have spent years studying what separates traders who make it from traders who quit. And the answer is not a better moving average. It is not a secret entry technique. It is psychology, specifically the 12 rare mindsets that legendary traders developed that almost nobody talks about. Today, I am giving you all 12, right now, in plain language, and I promise you, by the end of this video, something is going to click that no chart pattern ever gave you. Let us start. Mindset 1. You are not your profit and loss. Let me describe something that probably sounds familiar. You wake up, you check your account. If it's green, you feel good, you feel confident, you feel like you can take on the world. But if it is red, something shifts. You feel heavy, irritable, maybe you feel stupid, maybe you feel like a fraud, and that feeling follows you around all day. That emotional cycle is not just exhausting, it's one of the most dangerous things that can happen to a trader. When your identity is tied to your daily results, you start making decisions from a place of ego instead of logic. You hold losing trades too long because closing them means admitting you were wrong. You cut winning trades too early because you desperately need the validation of a green number. You revenge trade because some part of you needs to be made whole. The legendary traders learned something that took most of them years to figure out. A losing trade does not make you a loser. Think about it this way. Every surgeon in the world loses patience sometimes. Every pilot in the world hits turbulence. The quality of a professional is not measured by whether bad things happen. It is measured by who they are when bad things happen. You are not your profit and loss. You are the quality of your process. Separate the two, and you will trade in a completely different headspace starting today. Mindset 2. Losses are the entry fee. Here's the belief that is silently destroying most beginner traders. The belief that the goal of trading is to avoid losses. So every time a loss comes, there is panic, there is disbelief, there is the desperate need to fix it. And in that panic, traders do the most destructive things possible. They move their stop loss further away. They double down. They turn a manageable loss into a catastrophic one. All because they believed a loss meant something had gone wrong. Nothing went wrong. Seykota, one of the greatest traders in history, turned a few $1,000s into millions over decades. And one of the things he understood better than almost anyone was this: losses are not a sign of failure. They are the cost of doing business. Think about a restaurant owner. They buy ingredients. Some of them go bad before they are used. Do they panic every time that happens? No. They factor it into the cost of running the business. Your losses are the same thing. They are inventory that did not sell. They are the price you pay for being in the game at all. When you genuinely accept this, not just intellectually, but in your gut, something remarkable happens. You stop making losses worse. You take them cleanly. You move on. And ironically, you start losing less because you are no longer emotionally fighting the inevitable. Losses are not the enemy. Fighting losses is. Mindset 3. Grade your process, not your profits. Be honest with yourself right now. When you sit down to trade, are you focused on executing well Or are you focused on how much money you want to make today? For most traders, it is the money, and that singular focus on outcome is exactly what corrupts every decision that follows. When you are thinking about profits, you hold trades too long because you want more. You enter trades that do not meet your criteria because you need to make something happen. You break your rules because the rules feel like they are getting in the way of the money. Mark Douglas, who wrote what many considered the most important trading psychology book ever written, taught something called thinking in probabilities. Here's what that means in simple terms. Any single trade can go either way. A perfect setup can lose, a terrible setup can win. That is just the nature of probability. But here's the thing. Over 100 trades, if your edge is real, it plays out. The math works, but only if you execute consistently. When you judge yourself on individual trades, you're drawing conclusions from a sample size of 1. That is not how probability works. That is not how any of this works. The only thing you can actually control is whether you followed your rules, whether you managed your risk, whether you executed your plan. Grade that every single day. Grade the process. Because if you consistently execute a real edge, the profits are not a goal, they are a consequence. Mindset 4. Boredom is your competitive advantage. Here's something nobody warned you about when you started trading. Boredom is one of the most dangerous emotions you will ever feel at your trading desk. Not fear, not greed, boredom. Because when the market goes quiet and nothing is setting up, something starts happening inside most traders. An itch, a restlessness, a voice that says, you should be doing something. You should be in a trade. You are wasting time just sitting here. And so traders manufacture reasons to enter. They find a setup that is almost there. They lower their standards just enough to justify a position. And they lose money on a trade that should never have happened. Jesse Livermore was one of the most legendary speculators who ever lived. He made and lost multiple fortunes trading in the early 1900s, and he figured something out that still holds true more than 100 years later. He said the big money was never made in the trading, it was made in the waiting. Sitting on your hands is not laziness, it is one of the most active and intentional decisions you can make. Every time you choose not to take a mediocre setup, you are protecting your capital for the great one. You are keeping your powder dry. You are staying in the game. The next time you feel bored and antsy at your desk, do not fight it. Recognize it, name it, and then treat it as a signal that the market is not giving you anything worth risking your money on right now. Patience is not a personality trait. It is a skill. And it is one of the rarest ones in trading. Mindset 5. Trade the market you have, not the one you want. How many times have you stared at a chart and thought, this makes no sense, it should have gone up, my analysis was right, something is wrong with this market? I want to say something directly here. The market does not care what you think it should do, not even a little. George Soros made more than $1 billion in a single day in 1992 by betting that the British pound would collapse. But here is what most people miss about that trade. Soros was not attached to being right. He was not in love with his thesis. He was watching price, watching reality, and responding to what was actually happening. He once said that what matters is not whether you are right or wrong. What matters is how much you make when you are right and how little you lose when you are wrong. He was not trying to predict the market perfectly. He was trying to respond to it accurately. This is the shift that changes everything for traders who make it. Stop arguing with price. Stop waiting for the market to validate your opinion. Stop holding a losing position because you believe you are right and the market is wrong. Price is truth. Your opinion is just your opinion. The traders who last are not the most intelligent or the most educated. They are the most adaptable, the ones who can look at reality without the filter of what they wish were true. Mindset 6. Ask, what could go wrong before you enter? Here's a tool almost no retail trader uses, but almost every elite trader does. Before you enter any trade, before you click buy or sell, imagine that the trade has already gone completely wrong. Picture it. The position is moving against you hard. You're in a bad spot. The setup failed entirely. Now ask yourself, what happened? What did I miss? What was I not accounting for? This is called a pre-mortem, and it is one of the most powerful risk management tools in existence. Ray Dalio built Bridgewater into the largest hedge fund in the world. And the core of his entire philosophy is something he calls radical open-mindedness, which in simple terms means this: always assume you might be wrong. Always plan for failure before it happens. When you imagine failure in advance, something shifts psychologically. You stop being afraid of it because you have already lived through it in your mind. You have already built your contingency. You have already decided what you will do if the trade goes wrong. And now you can enter with clarity and a plan instead of just hope. Before every trade, ask not just why this will work, ask why it might fail completely. What would the chart have to do to prove your thesis wrong? Where would you exit? What is the scenario that invalidates everything? That question alone will save you from more bad trades than any indicator ever will. We're halfway through, and I want to pause for just a second. Think about your last big loss, your last account blow-up, your last week where everything fell apart. Now ask yourself honestly, was it really the strategy that failed, or was it one of these mindset failures? The next 6 are the ones most traders never reach because most people stop here. Do not be most traders. Mindset 7. Real confidence has nothing to do with your last trade. Most traders think confidence comes from winning, so they wait for a hot streak to feel good, and the second they hit a few losses, the confidence collapses completely. That is not confidence. That is just riding momentum. It is fragile, and it will always let you down at the worst possible time. Real trading confidence, the kind that legendary traders carry into every session, regardless of what happened yesterday, does not come from recent wins. It comes from something much more stable. It comes from knowing that you have a tested, real edge, that you have clearly defined rules, and that you have the discipline to execute those rules consistently, no matter what the last trade did. When you have that kind of confidence, something remarkable happens. Even after a losing trade, you feel calm because you did the right thing. You followed your rules. The outcome was outside your control, and you know that over the next 100 trades, the edge plays out. Seykota described the core elements of good trading as cutting losses, and cutting losses. His confidence was not in any single trade. It was in his unbreakable commitment to a process that protected him from catastrophe. Build confidence in your system, in your rules, in your edge. Because when you trust the process completely, the market loses its power over your emotions. Mindset 8. The market owes you absolutely nothing. This next one is uncomfortable to hear, but it might be the most important on this entire list. After a long losing streak, after weeks or months of struggling, a lot of traders start to develop something they would never admit to, a sense of entitlement toward the market. They start thinking things like, I have put in the hours, I deserve to win now, or I have been patient long enough, this trade has to work. Or maybe the darkest one, the market keeps hitting my stops, it's like it's targeting me personally. I need you to hear this clearly. The market does not know you exist. It has zero memory of your losses. It feels no obligation to reward your effort. It has no fairness mechanism. It does not care that you spent 3 hours analyzing that chart. It does not care that you really need this trade to work. The traders who survive decade after decade eventually arrive at a place of complete acceptance of this reality. Not bitterness, not resignation, just clear-eyed acknowledgement. You are not owed wins. You earn probabilities. You execute your edge, and you accept whatever the market gives back. The moment you stop expecting the market to compensate you for your effort and start focusing only on executing your process, a huge psychological weight lifts, and your trading becomes cleaner almost immediately. Mindset 9. A drawdown is not a punishment. Every legendary trader in history has gone through devastating drawdowns. Paul Tudor Jones had massive losses in the early stages of his career. Stanley Druckenmiller suffered significant drawdowns even while managing one of the most successful funds in history. Warren Buffett watched Berkshire Hathaway drop 50% during the 2008 financial crisis. These are not failed traders. These are the greatest traders who ever lived. The difference between them and the traders who quit was not the absence of drawdowns, it was how they interpreted them. A drawdown is not the market punishing you. It is not evidence that you are hopeless. It is data. It is the market communicating something to you. Maybe market conditions have changed and your current approach does not fit this environment. Maybe your position sizing is too aggressive. Maybe a specific setup has stopped working and it is time to adapt. Instead of spiraling into self-destruction when a drawdown hits, get genuinely curious. Ask what this is teaching you. Ask what you were not seeing before. Treat it like a difficult exam rather than a punishment. Every drawdown you survive and learn from makes you a more complete, more resilient, more dangerous trader. The ones who never face adversity never develop the depth to handle real pressure. Drawdowns are not the end of the story, they are part of it. Mindset 10. Master the downside and the upside takes care of itself. Amateur traders are obsessed with returns. They set monthly profit targets before the month even starts. They calculate how much they will make if the trade hits the full target. They spend more time thinking about the reward than the risk. Professional traders think almost entirely about risk. How much can I lose on this trade? How many consecutive losing trades can I absorb before I need to reduce my position size? What is the absolute worst realistic outcome if everything goes wrong at once? Warren Buffett famously said he has 2 rules of investing. Rule number 1, never lose money. Rule number 2, never forget rule number 1. He is not speaking literally. He is speaking about mindset, about where your obsessive focus should live. When you protect the downside with everything you have, something counterintuitive happens. The upside starts taking care of itself. Because you are still in the game when great opportunities appear, because your capital is intact, because you're trading from a position of strength instead of desperation. Before every single trade, define your risk first. Know exactly how much you are willing to lose before you even think about what you might gain. Make peace with that number before you enter. Then let the trade do whatever it does. Control the risk. The returns will follow. Mindset 11. There will always be another trade. Fear of missing out has probably destroyed more trading accounts than any other single psychological trap. You see a stock screaming higher and you are not in it. You see a cryptocurrency making a massive move and you miss the entry. And something inside you starts screaming, "Get in now! You're already late, but you have to get in. This is the one you cannot miss." That voice is dangerous. It has wiped out traders who knew better. Here's the mindset shift that changes everything. There will always be another trade. Say that again slowly. There will always be another trade. The market does not close forever. Volatility always comes back. great setups repeat. Opportunities cycle through again and again and again. The stock that ripped today will give you another opportunity down the line. The setup you missed will form again. The trade you miss costs you exactly nothing, zero. You simply stay flat. But the trade you chase out of fear of missing out can cost you everything: your capital, your confidence, your ability to trade another day. Think of it like catching a bus. You missed this one? That's okay. Stand at the stop. Another bus is coming. The city never stops running. The next time you feel that panic rising in your chest to get into something that has already moved without you, just say it out loud. There will always be another trade. Then wait for one that actually meets your criteria. Your job is not to catch every move. Your job is to catch the right ones. Mindset 12. The day you think you have figured it out is the most dangerous day of your career. This last mindset is the simplest of all 12, and it might be the hardest to actually live. The moment you believe you have finally figured out the market will take everything you have to remind you that you have not. Every legendary trader who ever existed learned this lesson, usually the hard way. Stanley Druckenmiller, who ran money for George Soros and built one of the most extraordinary long-term track records in history, still reads voraciously, still talks to other traders, still questions his own convictions, even when he has very high conviction. After decades of success, he approaches every market cycle as if he is still learning. Jack Schwager interviewed virtually every great trader alive while writing the Market Wizards series, and he found one trait that was consistent across all of them, without exception. They were almost painfully aware of what they did not know. Not what they knew, what they did not know. The markets are alive. They evolve constantly. Strategies that made fortunes 10 years ago will destroy you if you apply them blindly today. Market regimes change, correlations break, new players enter. The edge you have right now will not last forever if you stop adapting. Stay curious, stay humble. Study your losses harder than your wins, because your losses are where all the real lessons live. Read more than you trade. Talk to traders who see things differently than you do. The best traders are lifers, students of the market until the very last day they ever place a trade. Never stop learning. That is not just motivational advice, it is a survival strategy. Let me bring it all together quickly. You are not your profit and loss. Losses are the entry fee. Grade your process, not your profits. Boredom is your competitive advantage. Trade the market you have, not the one you want. Always do the pre-mortem. Build confidence in your rules, not your results. The market owes you nothing. Drawdowns are information, not punishment. Master the downside and the upside follows. There will always be another trade, and never stop being a student. Now, here's what I want to say before you go. If you're struggling right now, if you have blown accounts, if you have been at this for months or years and you are still not where you want to be, I need you to hear this. You are not failing because you are bad at this. You are failing because almost nobody in this industry gave you the psychological foundation that this game actually requires. Because psychology does not sell courses the way indicators do. Because mindset work is harder to package than a flashy strategy. But the traders who last are not the ones with the best setups. They are the ones with the strongest minds. Fix the mind, the trading follows. If this video gave you something real today, share it with one person you know who is struggling in the markets. It costs you nothing, and it might completely change the way they approach everything. Take care of yourself, and I will see you in the next one.